Welcome back to the Money Under the Mattress podcast. My name is Mitchell and my co host is Jake. And today we have questions from our viewers. We asked some people on Twitter a couple questions as well as some people on our Instagram. If you want to follow us on Twitter, my Twitter handle is Mitch Jensen underscore. What's your Twitter handle, Jake?
I think it is just a second here. It is at Invest Condensely.
At Invest Condensely. You should be able to find us pretty easily. And then on Instagram, it's moneyunderthemattress.podcast. So you can DM us either way through there to ask us questions for our next Q&A, which would be episode 25. For this one, we got five or six questions. They're all really good questions. And so I guess we'll start off right up from the top. What are some of your favorite investing books, Jake?
So we have some pretty similar investing books, but to name a few of the books that I really like, the first one would be The Little Book That Beats the Market from Joel Greenblatt. And pretty well, the book kind of takes you through, I guess it starts off with explaining to a kid about how much you'd pay for a business. He kind of does that exercise, but basically what it is you're looking for companies with the highest returns on capital, and you're paying the lowest. And the ratio they use, I think, is earnings yield for that. And then they also use return on invested capital. And basically, if you go on Joel Greenblatt's site, you can find a screener where it screens for that for the companies with it ranks the companies basically from the most attractive earnings yield as well as the highest returns on invested capital. And you'll put your money into 20 or 30 of those companies and you rotate out every year or so. I really like that book. Another book that I really like is Security Analysis by Ben Graham and David Dodd. That's kind of like I'd say that book's probably the most well-known book besides The Intelligent Investor for value investors. It's a pretty good book. It can be dry. It's a pretty long book, and some of the concepts are pretty dry. It's almost like a textbook, less like a normal investing book. Mm-hmm. Another book I like is The Dondo Investor by Manish Pabrai. I really like this book. I love how he talks about the Patel family and their low risk way to creating a massive hotel company.
That's a really good book. I enjoyed that one too.
Yeah, I really like it, the low risk way. Mm-hmm. And he really actually goes through kind of the valuation process too. And I know his investment, his framework for investing has changed since writing that book, but it still has some very important concepts in it that I think a lot of people could use. Another book is The Outsiders. And what that is it's 8 CEOs, and they regard them as some of the best capital allocators of all time. And I found that really interesting. And it really got me thinking more about who's running the business that I own rather than just looking at the business. Because I was always, when I first started learning about investing, a lot of my learning came from Phil Town's podcast with his daughter. And he talked about owning businesses that were so good that it didn't really matter who ran them. Basically, he's you want to invest in a business that basically can run itself, because one day a CEO will be just stupid and could ruin the company. So you want to find a company that can, function without the CEO being great. But then after reading this book, I realized that the way the CEO allocates its capital is super important. And yeah, that I found that was one of the more it changed my perspective on investing. What about you, Mitch? What did you think about that book?
I really liked it. I learned a lot from the Teledyne guy. Was that name Singleton? Was Henry Singleton at Teledyne?
Yeah.
Yeah, I really liked him. I don't know. I really liked a lot of them. Obviously, Buffett was a really good one. I really liked the Cable Cowboy, John Malone.
Yeah.
Yeah,
I also
it
liked,
was a really good book.
yeah, I liked a lot of them. Like Tom Murphy at Cap Cities is a good one
That
too.
was a really good one too. Yeah.
Yeah, I think that was just a great book. Like I think everyone should read it. I think, and you know what? I think it should be required reading for any CEO of any company. Like I, like if a CEO of like a major corporation hasn't read this, then like they're missing out big time.
I think almost like for any business school that has like if your majors like in management, I think that should really be required reading for a class too. I think capital allocation should be a really big class within universities.
Yeah, 100%. And then this is not as much as of an investment book, but more of a business book. But my next favorite book is Alibaba, the House that Jack Ma Built by Duncan Clark. It takes you through like the evolution of Alibaba and Jack Ma. And if you read the book, you realize that without Jack Ma, Alibaba would never be where it is today. And like if you're looking to invest in Alibaba, I would definitely read this book. So it kind of gives you like the history behind like how it came about and kind of like the culture in China as well. And it's a very, very interesting book. Like I'd recommend it.
So yeah, it's a good book on Jack Ma. Really liked it.
Yeah. Another book I like, it's kind of I would say it's kind of like the opposite of Joel Greenblatt's book, and it's Requires Multiple by Tobias Carlyle. And basically, his book talks about deep value and a lot of, well, I found him a lot of like talking about like reversion into the mean and how like a lot of companies that earn high returns on capital don't earn it for very long because capitalism is really brutal. And so he talks about like finding the cheapest companies. And yeah, like I like that book. It was kind of like it was nice because I actually read Joel Greenblatt's book first, and then I read this one after,
Mhm.
and it kind of got me thinking. Uh, I don't I I don't think I would do either for like I don't think I would ever use either strategy for my investing. Like I still think like the way that we invest is preferable, at least for me. I really
I find it
like,
more interesting to
yeah,
invest the way that we do, but I do understand the way that he does invest, and it's always good to get like another side to a story type thing.
and it's always good to learn about how other people are doing it too, right? And you can
Hmm.
understand like from their point of view. And I know that Tobias like runs his funds pretty like he's a quantitative investor, and it's interesting, really. Like, and it's always good to like learn new metrics and like how people are judging certain businesses, so you can kind of incorporate it within your own framework and how you do things, right? So
Hmm.
that was a really good book. And then one of my actually like more enjoyable reads I've read with an investing slash business book was The Rebel Allocator by Jake Taylor. And I found this really enjoyable because it's kind of like a story and incorporates like business like jargon and philosophy while also having a story behind it. So like if you're an individual who finds most investing books kind of dry, if you're not really, really deeply interested in like facts and like the things behind why this would be a good investment, like that type of framework. Well, um, the Rebel Allocator, like I'd really suggest it because it's not boring at all. Like it's not dry, and it incorporates a lot of key business. Um, well, it was a lot of good points about it. Like, um, for example, one of my favorite things within the book is the Iron Law of Economic Survival, and what it is the exercise or like kind of like the thought behind it is if you had three straws and your first straw was the cost of the product or service, your second straw in the middle was the price, and your third straw on the right was the value. And you can think of this as you move, like let's say the cost or price or value one, it changes like how it would like affect your business. So like let's say it's hard to do it without picturing the actual straws in front of you. But if you had the price close to the value straw, then you're not creating a lot of value for your product. You're not really creating a lot of, um, you're not widening your moat, I guess you could say, in a way. Um, and then if your price is too close to your cost, but you have a wide um, distance between your price and value, then that can also be bad because you need profits in order to like fund your business. So it's kind of cool, like getting into that. And then he kind of talks about how you can have like brand modes. He talks about a couple of different like competitive advantages that way. And he talks about if like you don't have like, if you're not able to like raise your price or your prices and have like pricing power, that you can also be like a low cost producer. And it was a really good book, and I really enjoyed it. Yeah, like I really recommend it to anyone that.
I'll have to get that one.
Yeah, it's really. I thought it was a really good book.
I know Munger read it, and I think he talked to Jake Taylor about it, and said they really enjoyed that too.
Yeah, like it's a really good book. Like even if you're not interested in business, like just the story alone is pretty good too. Like it was a really good book. Like he was really able to incorporate like a story as well as the actual like business learning within it. Like it was really exceptional book. Yeah, and that's my list for
that's your list?
Books.
Okay.
Well, books that I want to talk about. Like I've read other books, but you can go ahead there.
All right. So I might have 6 or 7 books that I like to talk about. My first book's called The Joys of Compounding. Have you read this one, Jake?
No, I haven't yet. I heard it's pretty good though.
Yeah, I put it on my Twitter the other day saying that it's probably one of the best investing books I've read in a while. It's similar to like the Essays of Warren Buffett, how they kind of, or like Buffettology kind of thing, where they kind of talk about like how Warren Buffett's style, they talk about different things. So like maybe one thing would be talking about dividends. The next thing we'd be talking about buybacks. Within this book, it's not just Buffett, but they talk about like psychology within the markets. And then they have like different quotes from different investors. So Nassim Taleb is like quoted quite a bit in this. Same with Munger, Buffett, Pabrai, Guy Spier. Like a lot of those guys are quoted in this book quite a bit. So it's a really good all-around book. I think I'd really recommend it even for a beginner investor too. Like it wasn't too difficult of a read. You didn't have to have too much like of an investing background for it. And that's by Gautam Bate. Just a really good author in general. Another one is Richer, Wiser, Happier. I think it's going to be like book of the year for investing, in my opinion.
That was a great book
by William Green. Yeah, it's like a really good book.
Awesome book.
I think is there 12 chapters, Jake? You read this, right?
Yeah, I read it, but I don't remember how many chapters it is. But it would be like it was 8 or 12, I think. It was one. I can't remember now, but it was really good.
Yeah, and each chapter just talks about like the lifestyle of the investor. So each chapter talks about one investor. So I know chapter 1's Mohnish Pabrai. Chapter 6 is Nick Sleep. Highly recommend those. They talk about Munger in it. Who else do they talk about? They talk about Greenblatt. They talk about Howard Marks. Templeton's also an interesting one too. I don't know. I just really like the way that William Green was able to kind of journal his thoughts about these investors as he's interviewing them. The next book, probably up there for the best investing book, besides like the top 3, like Benjamin Graham and then the Phil Fisher books, is 100 Baggers by Chris Mayer. I really like this book.
That was excellent too.
Yeah, this is an excellent book. It's like a spinoff from like 100 to 1 in the stock market by Phelps. This one's by Chris Mayer, and yeah, just a bunch of case studies that he talks about of stocks that went 100 or 1 to 100.
Just, I don't mean to interrupt you, but 2 other books I really liked was like Phil Fisher's book, Common Stocks, Uncommon Profits, and I also liked One Up on Wall Street.
Yeah, those are really good books. I have some actually. I have them in my pile.
Peter Lynch is a very smart guy. I really like Peter Lynch.
Yes, like the Peter Lynch One Up on Wall Street, exceptional book. Probably the top book I'd get if you started and that likes to start reading about investing and stuff like that. A little bit is about him, and then also like his thoughts. One Up on Wall Street, they talk about like the crash in '87. Black Monday is that what they call it.
Was he golfing? Was it?
He was golfing. I forget if it was Ireland or Scotland, but he was over in Europe and he was golfing. And he talks about when he found out that his portfolio was down 13% within the one day.
Yeah.
It's just an exceptional read. There's a lot of case studies within there too. He talks about 10 baggers in it. This is kind of where the whole bagger came from, I believe, is from Peter Lynch.
It makes sense. It probably was.
That's the first place I've heard it come from, was Peter Lynch, but I could be mistaken. Another good growth stock book is Common Stocks and Uncommon Profits. I feel like if you're new into investing, you've definitely read this. With the Benjamin Graham books, Phil Fisher is just an exceptional author, and talks about investing in good quality businesses compared to like where Benjamin Graham would be more worried about the cheaper businesses and wouldn't really care about the characteristics of it. Just really good book. Next book, I'm not sure if many of you guys would have heard about this. It's Peter Cundall biography called "There's Always Something to Do." This is by Christopher Russo-Gill. It's just like a whole biography on Peter Cundall, which is a Canadian investor, which I think he passed away a couple years ago now. But yeah, just an unreal capital allocator, not capital allocator, but just an unreal manager. Really enjoyed this book. I really like biographies in general.
Yeah.
Maybe not for everybody, but I really liked it. I just have 3 more books. The Essays of Warren Buffett. I feel like a lot of you guys have read it. It's by Larry Cunningham. It's pretty much just the Essays of Warren Buffett, literally what the title says it is. Just explains anything that Buffett has like thoughts of within the actual Berkshire business. Same with Munger. They talk about dividends, talk about buybacks. They talk about splitting shares. They talk about the A, the B class shares. Kind of anything that you really need to know on Berkshire is pretty much in the Essays of Warren Buffett, I'd say. For like the layman investor, like that's the first place I'd probably go to if I was if I was interested in reading up on Berkshire, other than their annual report. Next book is Warren Buffett: Interpretations of Financial Statements. That's by Mary Buffett and David Clark. Just a good beginner book to learn about annual reports and 10K annual reports and how to read them and how to interpret them. Next, the last one is You Can Be a Stock Market Genius by Joel Greenblatt. It's just a really good book on the whole case studies, a bunch of case studies that Joel Greenblatt has learned or invested in, or his friends have invested in. And so it's a really good case study book. I'm pretty interested in just learning up people's mistakes or their big wins. It's really interesting. It talks a lot about risk arbitrage and special situations. That's the majority of the book, I would say. So if you're interested in that, I definitely check that out. So that's all the books that I have on my list.
Yeah.
So definitely an extended question or extended answer, sorry. But it's kind of, I guess.
It's hard to put like one book. You can't like say like one book that I like. You know what I mean?
No, exactly. Like there's so many because there's like, One Up on Wall Street is probably my favorite. Not biography. It's probably one of my favorite biographies on an investor. But then Peter Cundall's a really good biography on an investor. I couldn't really pick between the two. I say my favorite like investing book is Common Stocks and Uncommon Profits. And then like there's just different ways, like different types of books.
But I think that although like investing books are like good and all, and like it's important like to read them, I like investor letters more. Like I like Nomad Partnership Letters by Nick Sleep and his partner Zach. Like I like those way more than the books. Like it's amazing reading those. And then also there was like a short kind of write up on Norbert Liu from Punch Card. And
that was a really good one.
They'll have like Joel Greenblatt and these other like good investors kind of like say like a few words on them like during it as well. And like it actually goes over like some of his thoughts on like NVR, which was like a famous investment of his that he wrote up on VIC. And like just a couple of those like write-ups on different people is amazing. And I really like reading. And then also Buffett Partnership Letters from the early days is kind of cool too, to read up on like how he thought about things.
No, exactly. I think a lot of people make a mistake early on in investing is reading too many investing books and not enough 10Ks or investment manager letters. I think
Or
you learn a
actual,
lot more from like a Bezos letter than reading just like an investment book about Amazon or just an
or like
investing book in general, right?
or like I'd rather learn like about like, there's those books out there about like GE and like, or other books where it talks
Yeah.
about like successful businesses or like unsuccessful businesses, and it tells you like why. I think
Mhm.
those are kind of cool too, because then you can kind of think about like what you want in the business that you're investing in,
Yeah.
and like what could go wrong, and it kind of like learn from history and like other people's mistakes.
Yeah, usually
And
like, the first thing I do other than read the annual report, if I'm looking deep, like if I'm doing a deep dive into a business, is see if there's a biography on the CEO or if they wrote a book about the actual business. And so that's what I did with Alibaba. I read
yeah,
the 20F, which is similar to like a 10K annual report. And then after I read that, then I was like, okay, well, I'll read a couple more from different years and then try and go and get the Jack Ma book.
one book that I really want to read and get is the one on Charlie Munger that you have.
Oh, Poor Charlie's Almanac. Is that the one
Yes,
you're
I want to
talking
get
about?
that.
Okay, yeah,
Yeah, I want to get that book pretty
yeah.
bad. But
That I mean, uh, yeah, right. Like the Intelligent Investor would have obviously been on my list, and then Poor Charlie's Almanac's obviously on my list too. But I
you
just
want to know
thought,
what though?
hmm,
Like I found the Intelligent Investor. I would be okay with just reading like chapters like 8 and 20. I think it is. The rest of the book kind of like I found like if you already kind of know about investing is kind of not. There's no point of reading it. And that's what
yeah.
I felt anyways when I read it. I felt like it was a lot of stuff I like.
I mean, I think there's a lot of okay, not in our time anymore, but I think back in the day, I think it would have been more important to read.
Yeah.
Nowadays, when there's bonds aren't giving away 15% yields and stuff like that, like
Yeah.
so it's like
Or even
or
like
majority
7.
bonds. Yeah, no, exactly right. So
Like they're able to buy like solid company bonds at like 7% on 100 par or like a par value, but like they'd be buying it for like 70 or 80 cents in the dollar and like get like a half decent return. But like
mhm.
nowadays, like you can't.
I
So
think I think if you just understand the investment framework of Benjamin Graham,
yeah,
um, like from the Intelligent Investor, then yeah, I definitely check out chapters 8 and 20.
yeah.
Um, I guess we'll move on to the second question there. Who do you follow on Twitter, Jake? Like that's what they're asking is who do you? I'm guessing it's the ones that are like who do you mostly look at like or read their tweets and go kind of in detail.
I think there's a lot of people within the Twitter community that I think provide a lot of great content,
Mhm.
and like it's been pretty amazing just to be able to like see what others are thinking, and you get to kind of you have the potential. This is what I've been thinking lately is you never know who on Twitter who is not like out there as being like the big successful investors like the Monish Pabrais of the world and all these like big names, right?
Yeah.
You get to like potentially see them from the start, for example, Connor Haley at Alta Fox, like these type of guys who aren't as well known as these other big investors, and
Mhm.
potentially you get to see them from the start, and as they rise, but like they have the potential to rise towards being like a super investor, I guess you could say.
Same with like a
But
John
yeah, like
Huber type thing.
yeah, John
Mhm.
Huber, like I love his articles. Like John Huber's is a really intelligent man. I like Bill Brewster,
I really
Ian
like his
Castle.
podcast.
Yes, yeah,
Yeah.
I like Value After Hours in general. Like,
Mhm.
I also like Patrick O'Shaughnessy. I like the Business Breakdowns podcast that he has. He also has another podcast, but I think I like the Business Breakdown one the
Mhm.
most so far. Um, and then I like Tobias Carlisle and also Investing with Tom.
Mhm. Yeah. Like investing with Tom, majority of you guys probably would have known him from YouTube. I listen to or I watch all of his videos as soon as they come out. Same with Brad Kellner's Stock Compounder. Those guys I think are killing it on YouTube. They're doing a really good job at giving valuable content to us. But
Yeah,
I find like I mean, me and you are fairly new to like the whole FinTwit.
yeah.
Um, we would used to dig deep more on YouTube, but I find myself now spending more time on Twitter than YouTube because I
And
think
you
there
can
is
kind
more
of
valuable content on Twitter, like for the most part. You know what I mean? It depends, obviously, but I feel like if you're trying to do a deep dive on on a business, or if you're trying to look for a stock idea through YouTube, you're better off just going through Twitter.
And you know what too? When I first joined, like when I first got onto Twitter and like started looking and like following people, you kind of like aren't sure like who's like knows what they're talking about and like who's just kind of speaking a bunch of like gibberish, I guess you could say.
Yeah, exactly.
But now like I've got to the point where like you see who's like really smart on there, and then whoever they recommend, then you go see who they are, and it's kind of like it's like a multiplier effect of like you're following more people every day because the people that you know that are like really smart people are telling you to like look at these people, and it's really good. I think like the whole Twitter community.
And for the listeners, I mean, I know we might be going fast, so if you go and look at one of our Twitters, we'll both have all these Twitter accounts that we follow, and so we'll put them down below. Like we'll have a link to the podcast, and then we'll have all the Twitter handles down below, as well as all the books with the authors if you want to follow the authors and stuff like that on Twitter. So the ones that I follow on Twitter, the Rational Walk, I really like him or her quite a bit. Him. Yeah. And so they're really good. The Rational Walk, I believe it's a guy. Adam Mead. Who else do I really like? 10K Diver. I really like him a lot.
He explains some good, like he'll like do like a thread, and he'll explain like a concept, and it's really thorough and it's really good.
Yep. Andrew Kuhn from Focus Compound. I'm not sure if Jeff Gann is on the Twitter or not, but Andrew Kuhn does bring a lot of value from Jeff, I believe, onto the Twitter account. So it's really, I really like them, as well as our podcast.
If you want to learn like more about investing, I look at like Geoff's old write-ups online.
Yeah, like Jeff's definitely like GOAT status for like early FinTwit, because I think he used to have a Twitter account, and then I can't find it anymore, and I don't believe he has it anymore. But no, I really like Jeff Gannon. Josh Tarasoff, I follow. He's really good. Alex Morris from our last podcast from The Science of Hitting. Make sure you go check out his Substack. We really like him. Michael Mitchell from Value After Hours. He's
been joining them lately.
Yeah, he's been joining the Value After Hours lately. He's a really interesting guy. Been kind of researching more on him. He's really big on lumber, if you guys are interested in that. And then obviously
he also bet big on, like he's very focused. Like he doesn't focused. Yeah, it's awesome to see.
And then the last guy would be Ian Castle. I really like him. He's from the Microcap Club. So if anybody's interested in microcaps, which I think you should be, in my opinion, definitely go check out his Twitter, as well as microcapclub.com.
Did you say Brad yet?
And yeah, exactly. Brad Kellner. He's super, super good. I like his YouTube and I like his Twitter. There's not much to beat about that guy. I think that's it for like the big. I mean, there's so many I could name off.
It can go on forever.
Literally go on. For us, pretty much just go on who we're following, and those are the ones that we all like. Obviously, I guess if we don't like them, then we probably wouldn't follow them, I guess.
Yeah.
But we'll go into question 3. Which investors do you follow?
Do you want to go first?
Yeah, so I guess like out of all those guys, I follow more like the, I guess, smaller investor than like the big ones. Like, you know what I mean? Like I don't really follow Greenblatt or Howard Marks that much. I mean, I'll follow all the guys that I just talked about, or all the people I just talked about on FinTwit that both me and Jake follow. But some of the ones that are on Dataroma that we follow, for me, is Norbert Liu of Punchcard. Really like him. Obviously, Monish Pabrai, Charlie Munger, Warren Buffett, Guy Spear,
Greg Alexander.
Is anybody else that I'm missing, Jake?
Probably, but if you go on Dataroma, there's a long list of guys. We don't follow all of them. Like there's a couple in there that are not really our style. But if you find people who who generally have like, 70% of their top 10 or 70% of their portfolio in the top 10 positions, we're probably paying attention to them.
Yep.
But yeah, like Mitch said, like you'd have money shit in there. We'd have obviously Buffett, Munger, Greg Alexander, Norbert Liu.
I think Norbert Lou's an overlooked guy, or person,
Might be
but
one.
I think that guy is going to. Let's just say that I'd look on Dataroma every single day to make sure that he didn't change anything on his portfolio.
I think he's probably like, he does not get any like clout, I guess you could say.
Mhm.
He doesn't really.
He doesn't get enough credit, and there's nothing really on him. He's kind of like Nick Sleep, like that's another investor. I mean, he doesn't really invest anymore.
Well, he invests, but
else.
we don't really get to see it anymore, I guess.
No, I think he just does personal, does he not?
Yeah, but like we wouldn't be able to, that's what I mean. Like we wouldn't be able to see
Yeah.
like what he's in. But
No.
like apparently he's just in 4 companies.
Yeah.
Still, I think last time we heard, but
that's the last time we heard, and that was I think since like maybe 2016 possibly, because he stopped in 2014, was it?
No, okay. What happened, I think, was he closed up the fund in like 2013, 2014, and then he put all his money in like 3 or 4 companies, and then Amazon. I think it was 3. I've heard 2 different stories, but I think it was 3 companies.
3 companies, and then he bought ASOS.
Then he bought ASOS because Amazon became way too big.
Mm-hmm.
A portion of his portfolio, and then
I don't even know when he bought ASOS. I just know that that's the last thing I've heard is that he had 4 companies, and ASOS was one of them.
Yeah, that's all I heard 2 different stories, but anyways, Nick Sleep's very interesting investor.
Next question is, have you found many great investments lately? Oh, that's a good question.
Which one?
I mean, we've had one for the year. We've had one buy for the year. I'm not sure if you guys, I'm guessing you guys know, it's Alibaba.
One new buy.
That's the one new buy of 2021. I'm not sure if it was Monish or Munger says that it's a good year if you just have one good idea. That's all you need, really. I think it's more of a Monish thing, but if you have one idea, whether it's to sell or to buy, that's a good year, I guess.
We've also been like we sometimes add to other positions.
Yeah.
What's funny is when I first started investing, I had a hard time like averaging up, I guess you could say.
Mm-hmm.
I had a hard time like after, because like
psychology of a day.
Like right now, like I'm still like every once in a while as I get money coming in from our jobs and stuff, like I'll like put money into Equitable Bank in Canada, and like I doubled that, and like it's hard like mentally to think like you got to put money into there because you just doubled it, but it's selling at a good price, so it's better than holding cash right now. I think like I still have like a decent amount of cash, but it's better than like stacking up too much cash with inflation, right?
Yeah.
Like it's, in my opinion, it's a better alternative than stacking cash, like too much of it at least.
Yeah, I don't even think I've added to a position. I've cut a little bit of Micron, and I've bought Alibaba. That's like 2 things I've done this year. And I just cut some Micron just to get into Alibaba. That's what the whole reasoning was. Is that I think that it was the most overvalued of my, like it was the most close to the value or overvalued to any of all my stocks. And so I said, okay, I'll cut some of that and put it into Alibaba. But that's really the only reason.
So far, like there's been investments like or companies come across our radar and stuff, and they'll be good, but we just can't find anything that beats Alibaba right now to put your money into.
Yeah,
I've been adding to Bubba too. I've been adding to Bubba too, like for like the last like couple months. Like I had like a little bit in Bubba before, like it kind of went down. Like
I made a little bit of a bet right after Munger, and you had it just before Munger.
Just before Munger, and then I kept like just piling it in ever since. Like
the more you read up on it, the more you want to buy. That's kind of like what it's been like for me.
And besides like the whole like, oh, they're gonna get delisted and like the government, blah blah blah. There's so much good going on within the Chinese economy as well as Bubba, and they have like there's so much like such a great ecosystem that so far I haven't found anything that like makes me want to get out of nothing makes me want to stop.
There's nothing that I want to get out of Alibaba for sure. There's nothing I want to get out of my stocks for sure, but I still have a little bit of a cash position. I think you do too.
Yeah.
And so I guess we're looking for new investments, but then there's nothing really that's really that we're just letting the strikes go by, and we're just letting I guess that's like if you ever read The Science of Hitting by Ted Williams, and Buffett talks about it all the time, is that when you're an institutional investor, or if you have investors, you have people in the stands saying "swing you bum" at all these pitches, right? Which the pitches are the stocks going by. And so, let's say for an example, I don't know what's something that's out of our circle of competence, Jake.
Well,
A lot of things. Like let's say Tesla. Tesla's out of circle of competence. Okay.
Yeah.
So we sat there for the last year and a half since Tesla's been ripping, and nobody has to say "swing you bum." But see, with Warren Buffett, there's people that have put on Twitter saying "swing Buffett" on Tesla, right? So he has to deal with that, and so I like, that's why I like being just a individual investor and just investing for myself, having
Well,
no real investors, I guess.
it's like, oh, sorry.
There you go.
It's like Buffett says, where you have 3 strikes in baseball, but as an investor, you have like unlimited strikes, right? So
Yeah,
you can let them
exactly.
come across the plate all day. You don't got to swing.
Mm-hmm.
And you only swing at like mispriced bets, as Munger would say. Like you only look for mispriced bets. Like,
And what we're looking for, Jake, we're looking for not even we don't want to we don't want it just down straight in the middle. We don't want it down straight in the plate. We want
no,
a slow, straight to the plate, right where we want it. That's
yeah.
where we want it slow too. And so
And
that's what
I've
Alibaba was. It was slow, and it came right to us. And so we'll see if we I guess get a home run on it, or if it's just a pop fly.
and you know what though? The thing is with Bava, I've heard people online like talk about how like it's already such a big business, like there's no way it like 10x's and all that stuff. But if you look at the economy that it's in with China and how many people there is, and it's spawning, its ability to spawn out different types of businesses, like why couldn't it 10x in 10 years? Like what's stopping that? You
Yeah.
know what I mean? Like, anyways,
I mean, we'll eventually talk about Bubba someday.
yeah.
When we really, I mean, we have a pretty good thesis on it right now.
But when stuff, we don't want to make a thesis on it before like we're ready for it. Like, not like, how do we put it? Like, we don't want to make a thesis on it
when we want to go
before
public,
it works.
we want to go public about our ideas and our thesis on it. We want to understand 230%, like 250% of the business. Right now, we understand about maybe
No, Mitch,
technically. What would we
I can't
understand
get
about the
any.
business?
But it's not even that. It's not even the fact that like we need to like learn more about the business. It's just that I don't want to like put my theses out there when it's like we're still adding to it and stuff. You know what I mean?
True. I mean, we're not that big, obviously, but like, yes, that is true.
But
And I mean, we had done a lot of work for it, and we've done work for the last 3 months, 4 months now, reading up on Alibaba, and I guess we're just not ready for our ideas to be out there yet on it. We've given some ideas on it so far. That we've kind of hinted at through the different last couple podcast episodes. But yeah, I guess eventually we will have a podcast about our full thesis on it. It'll probably be an hour, a couple hours, probably. Honestly, it'll probably be a couple, maybe a two or 3 part episode.
well, there's
about it.
But that's the okay. So okay, if you wanted like a short thesis, it could like I could say it in like 5 minutes.
Mm-hmm.
But the thing is I don't want to like put that out there. I want to like basically like, you know how Manish says like I don't talk about like why it's a good investment before, like when he's on like I want to be like Manish. I'm kind of like cloning his like his framework behind that. Like I'd rather like recap it over like multiple episodes like down the road, where like after like let's say like couple, well, it could turn out to be easily a couple of years investment, but like I wanted to like explain like why it was a good business or like an investment, sorry, and then like why it worked or it didn't work if that is the case. Like I want to like go over. I don't want to like.
And we also don't want
it before it happens, right? And
we also don't want
like,
somebody just to listen to the podcast, randomly click on our link on Twitter, and then all of a sudden go, yeah, I'm going to go buy Alibaba, right?
Yeah.
So we want to hint at saying like, yeah, okay, yeah, we own Alibaba, or we've been buying Alibaba still, but yeah, we're not recommending it to anybody.
No, definitely not.
Right?
Because there's definitely like like if you basically it's like if you blindly clone other people, like if you go on Dataroma, a 13F season, you blindly clone someone.
Mm-hmm.
If you don't understand the business, that means that if something were to happen, and let's say like the big investor that you cloned realized what happened and they got out, it could be months before you even see that. And then the price of the stock could go like way, way down. See, like you kind of have to like know why so that you don't, anyways. But
later on, we'll for sure talk about Alibaba.
Yeah.
We'll talk about its flaws and we'll talk about its pros and pros and cons, obviously. And so, yeah,
there's a
eventually.
weighing machine. Oh, sorry.
There you go.
There's a weighing machine though between the pros and cons. It's overweight on the pro side, big time.
Yeah, at least that's what we feel.
Yeah.
I guess we'll wrap it up with our last question. Tips for an early investor. Where should I start? Can I got two words? Annual reports. Just read them. Pick up an annual report of. I'd highly recommend starting with like a business that you know or you go to on almost on a daily occurrence, or like your employer. That'd be a perfect business to read up on. So if you're a worker, if you're a Google employee, like I think picking up Google's 10K would be perfect.
I also
start reading about.
I also think that if you pick up a 10K that has like one segment to their business and not like 50.
Yeah, no, like
probably good too.
So usually you're gonna have to go for probably a smaller business, but like a good business to start out on. I think a really good, fairly simple business to start out on would be something like a Seritage Growth Properties, so like a real estate. Maybe that's a little more difficult. Like maybe like a Boston Omaha. Would that be
similar? No, like I'd say like a restaurant that you know.
Okay, like a restaurant,
like a Chipotle or something. Like you know what I mean?
Like a franchise restaurant.
Like or just like something that has like just doesn't have.
Okay, like maybe like a Dollar General, Dollarama in Canada.
Something that has like one segment to it.
Yeah,
I know a lot of the companies that we're invested in don't really. And then you could like, for example, like Equitable Bank. It's a bank, so it's kind of different than.
But it has savings and loans. It's a savings and loans bank. So, I mean, it's all simple. Based on what your circle of competence is, right? So if you're really understanding technology, then a cloud computing business might be a perfect thing for you, right? If it's only just based on cloud. But if your circle of competence is in finances, then possibly a bank, like a regional bank, might be a good start. I'd say, yeah, I think a regional bank would be a good start. What do you think, Jake?
Yeah, well,
like Heiko would be, or not Heiko, sorry, Hingham.
Yeah, I read Hingham there like last year, and I thought that it was good, but at the same time, if banks aren't in your circle of competence, it's not the easiest business to understand. Like you understand that like basically you have deposits coming in, and then you have loans going out, and like that's what a bank is, I guess, like in the simplest terms. But like there's so many like different terms that you have to know, and like you can get really lost really quick if you don't really understand like that industry very well. But like I would say like I think everyone understands like restaurants.
Yeah. No,
if you can find a restaurant, you know what I mean? I feel like that'd be easy. Or like would something like Walmart work too? Like something like
Walmart might be a simple one, or like an arcade like Dave and Buster's. Like that was I've read that one before. That was fairly simple.
What about MGM was I read
MGM was
last year. That was one of the first ones I've ever read though, was MGM. Because I kind of understand like the gambling side of things. But yeah, it kind of made sense to me.
Another one that might be I was gonna say maybe like the Atlanta Braves through like Liberty Media.
Yeah, that'd be interesting too if you're a sports fan.
If you're a sports fan, if you just look up like the Atlanta Braves as a stock. I think the ticker's called BATRK, BATRK. I could be mistaken on that one. I read that one when I was early on. That was a good one to read up on if you're interested in sports. But yeah, like I think just like what's that, sorry?
What about like Shopify?
Shopify, possibly. Like Spotify might be a good one. If you're interested in music or something like that.
Yeah, because I haven't read Shopify's thing, but I think they only really have one. Probably have more than one business segment, but primarily one business segment. At least I thought they did. I don't really know much about the company, but other than that, people use it for drop shipping and stuff.
Or start off with like just a newspaper business, like very simple business. It's newspaper. You sell ads. You sell. I mean, I guess it's not a simple business, but it's simpler.
Man, start off with Facebook because it pretty well is all the same thing. Besides, like their VR and
You
stuff.
think Facebook's easy?
I think Facebook's pretty easy to like the point where maybe not
because
like,
if everyone understands, if you have Facebook or something, maybe.
Yeah, like Instagram, Facebook, they're both social media.
The way I think about it is, if you start off and you read it, and if you don't understand the words, then you skip to the next one. You skip to the next one, and then eventually you can come back to it and be like, okay, well, maybe is it just automatic competence, or was I just kind of an incompetent investor at the time?
I feel like
didn't understand like the terminology.
I feel like no matter what one you read, there's gonna be like terms in there where it's kind of like what the heck's it talking about, because it's written by like lawyers and stuff. So it's kind of like, yeah. Anyways,
but yeah, start off with the reports, and it's just kind of like swimming. It's you got to get into the lake, you got to get into the pool or the lake at some point. I guess just jump in, and eventually you figure it out.
Yeah.
But yeah, that's all the questions for today. If you're interested in following us on Twitter, my Twitter handle is, I believe it's at Mitch Jensen _, or it might be just at Mitch Jensen. I'll figure it out right now. What's your Twitter handle, sorry, Jake?
I think it's at Invest Condensely. At
Invest Condensely. Yeah, mine's at Mitch Jensen _. And you can also follow us on Instagram at moneyunderthemattress.podcast. And that will also be our email at gmail.com. So thank you very much. And we'll link all the show notes down below on our podcast, as well as on both of our Twitters.
Yep.
Anything else you want to add today, Jake?
No, thanks for listening, guys.
Awesome. Thank you very much. Thank you for listening to this episode of Money Under the Mattress. If you have any questions about this episode, you can email us at moneyunderthemattress.podcast@gmail.com. Everything discussed in this podcast is our opinion and should not be used as investment advice. This podcast is for entertainment and education purposes only, and hope you enjoyed it.